Good morning, everyone. You're all very welcome to the Alpha Capital Group month-end preview for August. So I suppose first things first, recapping on our video from earlier in the week. We've still seen that elongated pressures coming into the markets off the backdrop of the Jackson Hole Symposium on Friday. Now, the assets classes here that I've got in this particular video is primarily based around the indices. So we've got the US-based indices, the optimal performance against the European indices, and we also have gold as the hedging instrument. Now, again, broadly speaking on gold, we can see that the sell-off on gold is continuing to run lower. And again, that's off the backdrop of a slightly firmer, slightly more bullish dollar over the last couple of weeks or so. So we've noticed since literally the 12th, kind of 14th of August, the DXY has continued to continue ticking to the upside, continue churning new highs. We saw that last week before a short-term pullback on Friday, and then the impulsive move on Friday afternoon. But of course, in the broader consensus and the broader higher timeframes in the markets, gold very much does look like it's completed this liquidity order move here at 1807 and is pushing back into these lows here between 1685 and 1700. At this point in time, it does look like gold is in somewhat of a free fall move. So it is just about being important to mark up your levels, identify your price action structures, and of course, being able to assimilate a clear trading plan and strategy around that. Now, at this moment in time, obviously, with the dollar holding a lot of its bid and continue to kind of be pressurized to the upside, it does put a lot of underweighted downside pressure on gold. And as a result, albeit quite choppy over the last couple of days or so, or the last week or so, gold is gradually making new lows. We had a new low on the 22nd. We had a new low on the 29th on Monday, and we're getting a further new low within this bearish correctional move as we speak at the minute, and the gold prices are continuing to churn to the downside. So it's just about being aware of that as well. So at least that way then, as market participants, as traders, we know exactly what way the trending price action is moving. Now, moving across to the indices, and I've kind of prepared these charts, kind of just looking at some observations from yesterday's movements off the back of Friday's initial sell-off. So Friday, we had that very clear assimilated approach in selling. Okay, now just to kind of recap on the higher time frames, we took out on the S&Ps, on the Nasdaq, and on the Dow Jones. We took out all three liquidity areas of interest. Okay, all three liquidity areas of interest has been taken out. Price action has seen visible new lows, new pullbacks, new lows again being created. We're seeing that on the Nasdaq. We saw it here again. We saw it on the S&Ps as well. Now, structurally speaking, on the Dow Jones, there was three short-term levels of interest that I was looking at, right? The first was at 32,000 on Dow Jones. The second one was this region around about 12.4 to 12.5 on the Nasdaq, so this appropriate region here. And then the third one was around about 4,000 approximate region on the S&Ps. Now, of course, we didn't quite get there last night. Obviously, we did get to all three basic levels, but we didn't get any higher to clear out some of the order block moves that occurred. And obviously, the larger, higher time frame 4-hour zones up here at 41, up here at 12.8, and of course on the Dow Jones way up here at 32,400 to 500 range. So the progressional movements in the indices at the minute is all three are continuing to the downside. We're seeing it in Europe as well. After the initial impulsive sell-off on Friday, we had that consolidation. We took the lows again yesterday. We flagged back up, and you can see here, nice clear price action rejection around this 32,000 handle, and the markets have since sold off very, very quickly. And of course, with that is bringing a further 250 point sell-off already in the first 3 or 4 hours of trading this morning. So as we speak, we are almost at 9:30 local time here in the UK. And of course, since that first hour and a half or so of the European markets being open, we're already seeing the US indices on the Dow Jones being down around 150 points. So there's a half a percent sell-off already in about 90 minutes. So we're starting to see the volatility continue again. In the Nasdaq, we're seeing a very, very similar story. Okay, higher time frames. We obviously didn't get back into this 12.8 level, but we did. I did identify this kind of bear flag pullback level, dead cat bounce into 12.6. When we rejected 12.6, we broke through the volatility level here at 12.4, And of course, we got that short-term flag back up again, short-term pullback. Of course, we did temporarily break above 12.4, probably, I suspect, to take a few stops. However, in the last hour or so, we are seeing these markets continually selling off again, and the downside pressures are still very much visible here. And of course, with the indices selling off, will we see that factor back into people wanting to buy more of the dollar as a hedging instrument off the back of the risk-off sentiment that we're currently seeing in these markets? And no surprise, if we look at the S&Ps, very, very similar rhetoric and I suppose visibility in terms of the price action playing out. Massive sell-off on Friday, dead cat bounce to about 60-point move in dead cat bounce. Took the lows yesterday afternoon, and of course got that flag back up to that 4,000 level, and we're seeing that 20-point sell-off already. So markets really alluding to a potential sell-off. So now it becomes a case of, can we see the price action break through these short-term lows we saw yesterday, which it looks at this moment in time that it's going to be very likely to do so, and of course allowing for those deeper runoffs and continuations in the bearish momentum. So that brings in some downside targets that I'm looking at. Okay, so there is a short-term level here at 39.50, and that was something that I did look at last week myself personally. But the broader consensus is, well, if we're going to see the markets do what they did way back in March when we had that equal high and then all of a sudden the next wave of selling, well, then it just becomes a case of how far are we going to go? Okay, because the retail traders will say, well, there is kind of an inverted head and shoulders developing here. It's probably a little bit clearer on the daily. You can kind of see that there, albeit quite slanted, which does bring in areas, I suppose, as I said, between 39.50 and 3900. But if you're looking at the trending price action, you could very easily see the price action selling off way back into this 37.50, 3800 low. Okay. Similarly, again, on the Nasdaq, if you apply a similar logic in the higher time frames, not to say it's going to be guaranteed to happen, but there is a lot of space down here that the markets could try and take out in terms of liquidity. Okay. So it's just kind of running those winners, getting your risk rewards, and I suppose factoring that into the price action as best you can within your trading plan. Okay. Now, if we migrate across to Europe, I suppose the clear thing that I'm looking at in the FTSE, which has been quite boring over the last few weeks, is that gradual bullish trend into consolidation into this region of interest here between kind of 75.50 and 76.50. Albeit this time around, when we had the highlighted consolidation, we were stuck between 74.50 and 75.50. Now, structurally speaking, what's happened here? Just to tidy up this chart, where we had the consolidation, we had the initial impulse, we flagged back up, took the last liquidity, broke to new lows again. And on the order block moves, we've created new lows. We've flagged back up to this region up here at 74.80. We've rejected it to the T, and now the markets are creating new lows again. So structurally speaking, that does put the FTSE under quite a bit of pressure. Okay, and with pressure means obviously downside volatility, and of course means pressure of potentially coming into some of these targets. So for the last number of weeks, if you dial up to the daily, we're seeing a lot of price action here. Well, 7,000 has been a massively key level, but there's also kind of a lot of volatility around 7,200. So from my perspective here, obviously the daily candles are very, very bearish, which does bring in the viewpoint that we're probably going to come in or try at the very, very least to test some of these levels down here. So 7,200 is an area that I'm looking at personally speaking. 7,000 becomes another interesting bifocal area of interest for the next week or so. But of course, obviously month end today, the pension funds in the UK traditionally always have to sell on the last day of the month and then buy on the first day of the following month. So that could potentially alleviate some of the short-term selling. But of course, let's just watch the price action. Let's just see how things are developing, because at this moment in time, there's very, very clear bearish undertones, both in the US markets, but also developing here in the European markets. Last but not least is obviously the DAX and the EUROSTOXX and the Euro indices, and we're seeing again very, very clear moves here in the DAX. Now the DAX, just to kind of isolate a few things, well, we had consolidation, we had that massive sell-off back into the 12.5 level. We came back up, taking this gap close from the 10th and 12th of June. And of course, we had that 61.8 rejection. We had that bearish engulfing. Price action came and remained back underneath. And we started to see that next wave of selling filter through. So on the daily, very, very clear moves. On the 4-hour and 1-hour structure, we are now confined to this region here around 12,850, between 12,850 and 13,000. So structurally speaking, we've identified this bottom structure. We've flagged back up beautifully. obviously we're starting to create that bearish trending price action. So we've got our first wave. We've got a little bit of a dead cat bounce again. We just take out the short-term highs, of course, as we tend to see in the markets. We make that second wave. We get a pullback again, and the markets are trying to create that third wave. So at this moment in time, it all depends on whether the DAX can break through 12,850. I think if the DAX breaks through this short-term liquidity area here, you're probably going to get that deeper third runoff back into the 12.5 zone. Okay. Now, whether that happens or not, we're still waiting to see, because as we isolate the price action on the 1 hour structure, and of course, just observing the liquidity around this zone, we're starting to see a little bit of a pause in selling. Okay, we saw it yesterday, we saw it on Monday. A price action's holding above this level. So if the price action breaks through, that's going to probably be the telltale sign that this is going to have a further elongated sell-off, not just today, but maybe probably into the end of the week, and it puts some downside pressures on these markets. So from my perspective, watching this level very, very closely, and of course, particularly the fact that we had this short dead cat bounce, we've broken down, we flagged back up, back into that yellow level, rejected it to the T, does indicate that the price action is stressing that it still maybe wants to go a little bit lower. So it's just about being aware of that. At this moment in time, I'm not interested really in buying these indices until there is a cyclical change in sentiment, and we start to see a period of consolidation where we start to, instead of making new lows consistently, we now move a period of sideways movements where we're ending the bearish price action. At this moment in time, that has not happened. So therefore, I'm not looking at buying indices. Now, again, last but not least, on the Euro Stoxx, is similar viewpoint. Okay, last week we came up all the way into this level here, 38.25, 38.50, 3800 level, and rejected very, very clearly, particularly on the 4 hour and the daily. Rejected it very, very nicely. Okay, now structurally speaking, we obviously have an inverted head and shoulders developing. So you've got first wave pullback, second wave pullback, third wave. So you're starting to see that VVV formation develop. Now, from my perspective, I'd be kind of cautious looking at those retail trading platforms or retail trading patterns, because markets can, like anyone in an institution, can identify these patterns very, very quickly. Okay, and algorithms can stop them very, very quickly. So that's why I do prefer to focus on the price action visibly rather than a structural pattern that develops, because they don't always play out, and when they go wrong, they can go very, very wrong very, very quickly. So that's just from a personal perspective. Now, when we do look at the kind of the broader trending price action, you can see here price actions rejected up here around 3800. We've come into this 36 area of liquidity here. We've obviously held above it briefly, broken through, we've pulled back up to retest. Very, very clear movements in the price action structures. So although these patterns are not something that I employ myself, it is very, very important to know them. So at least that way then you can still identify them. Okay. But I think in the broader consensus of these markets, price action is king. Okay. Being able to visibly understand the price action, what's happening, being able to mark up your levels, being able to read what's happening, and then being able to react accordingly is ultimately what's important. Okay. Everything else beyond that should take second place. Because it's focusing on which way is the trending movement, what way is sentiment looking at, and then trying to take advantage of that. Now, again, kind of like the DAX, this area here, but around 12,850, the Euro Stoxx here, 35.25, 35.30 is structurally key short term, because we are creating a short term bottom. So from my perspective is today, does this area give way? Does the price action falter? And do we see a continuation sell-off? If we see the price action breaking through here, well, it really does bring back in this zone here between 3400 and 34.25 as a downside target. Okay, so that's kind of what I'm looking at there on the Euro Stoxx. That's pretty much it for the month-end preview, guys. So quite, ladies and gentlemen, so very in-depth, just going through each asset class methodically, but having clearer structures. I think is obviously important to understand the bias behind it and the rationality behind thinking. And then, of course, setting ourselves up for tomorrow, which is obviously the beginning of a new month, September. And of course, Friday, which we do have NFP. Now, Friday morning, we will be doing another video to preview the NFP exclusively. So we'll be looking at that in its own right as well. All right. Everyone have a great week. Trade safe and utilize the volatility in these markets.